Hello traders, this is Tradog's weekly video. As always, I will start this video with the DAX index daily chart, and I will go also through weekly charts as well, comparing DAX with the US indices. So what can we observe here on this DAX index daily chart? We can observe that this pattern behind us is a up, then zigzagging in the upsloping channel, which can resolute either with the up move, exhaustion move above this, or with the pullback and the channel breakdown. This would be the important levels in my opinion, and what this market did here was 6 days of inability to close above this zone 26,430 to 455, which was important zone for us for day trading. Now you can see also here how market is moving from consolidation and balance. It's going out of the balance and into trending mode, then back into the balance. So if you are a breakout trader, choose your battles right, because majority of time market is in the consolidation and in the balances, and those balances and ranges can last literally for months. We had that before this year. Now market here in this part, as said before, is unable to close above this zone. You can see these spikes here, and if we would observe futures as well like this, then on futures you could also see that market is still below this trendline resistance. This is not back adjusted futures contract. Market made a range, then it started to hold above the midpoint of that range, making a overlapping range. So basically we do have a slow grind higher. That slow grind can last for more time. When we observe the US futures, S&P and ES made a triangle or bull flag breakout on Thursday, making new all-time highs. Friday was an inside day. Nasdaq is still lagging behind. Dow Jones also lagging, and this area here of support was tested on index, not on futures, while Russell made new all-time high. Now, when we compare DAX with the US markets on a higher time frames, like a weekly chart, here we can see that DAX is basically sitting on the upper end of a weekly Bollinger Band, so it's basically sitting at resistance, and this is the second week as it does so. And here on this chart you can also observe that the last time a market was trading around the upper end of the weekly Bollinger Band was here on the Santa Rally previous week, poking above, trading completely above the weekly Bollinger Band, and then going back inside. This is S&P weekly, this is that breakout, and here if we would turn on Bollinger Bands, you could observe here that there is still plenty of room on the S&P up to the weekly Bollinger Band, while DAX is grinding on it. That's the difference. Here is Nasdaq weekly lagging behind, and here is Dow weekly, which is more closer to the DAX, also inside week as the previous week, while this is Russell looking the most bullish of all, and also made new all-time high. So this week DAX, S&P, Russell, and Stocks 50 with the new all-time highs. Now this here is a call for caution for the new longs, and we do have a specific situation now. It is mid-August. This here is vacation time, grinding higher, volume isn't really much. I think as we go up to the end of the month that this should be better, and especially in September all potential catalysts didn't really move the market. Those would be NFP report from last Friday, then from this week CPI and PPI. Nothing much happened there. Traders faded those moves, and for the next week there is really nothing much on Monday. On Tuesday there is German zoo economic sentiment. It's not really a big deal. Then moving on with no big deals, also as on Wednesday ECB President Lagarde speaks, nobody cares about that. Then FOMC meeting minutes will be in the afternoon, also nobody cares because this comes without press conference, therefore it's the a less important thing. And then on Thursday there is Philly Fed manufacturing index and unemployment claims. Again, nothing much expected there. While on Friday we do have flash PMIs, and expectation is absolutely the same or even less, like that we had on the NFP, CPI, and PPI. Everybody and their mother likely is going to fade those spikes if market spikes on this. Finally, Friday is monthly OPEX, and that's interesting because monthly OPEX, and especially on DAX, is very important due to the fact of just how many swing lows and swing highs were made inside that OPEX period, meaning few days before the OPEX itself, and few days after the OPEX. So that would be basically all in the next week. As said, nothing much in the economic calendar. Friday is interesting due to the flash PMIs and OPEX, and we do have grinding higher price section. Buyers are still on the dips, but sooner or later this should resolve with at least one long liquidation or even a trend down day, simply because we do have a daily ATR going down steadily every single day in the last few weeks. Now down on Friday was down only to 316 points, and around here was around 400. So notable shrinking of a daily ATR, which is usually resolved not by explosive move to the upside, but with the down move. And obviously a market can do this for more time. So choose your entry points very well. Be careful here because we did had much better swing long opportunities than this. You don't really need to buy this expecting further breakouts. Let the market show its way, and stick to those important levels which I did show here on the index daily chart. But that would be it. I wish you a pleasant weekend and good trading.